Hello and welcome to today's webinar. My name is Alex Paul from InvestorStream and I'll be your host this morning. Today we'll be hearing from Sacgasco Managing Director Gary Jeffery, who's going to provide an update on the company's near-term plans and value opportunities. Please feel free to send in your questions via the chat platform, in the question pane in the GoToWebinar control panel, or simply email them to me at alex@investorstream.com.au. We'll address the questions at the end of the presentation and we'll attempt to get through as many questions as time permits. You can also download a copy of this presentation by navigating to the handouts pane in the control panel. A copy of the webinar will be available on Sacgasco's website later today. For now, I'd like to throw it over to Gary to commence proceedings. Gary, the floor is yours.
Thanks, Alex, and welcome everyone. It's great to have an opportunity to talk to you and give you an update on Sacgasco and its activities in the Sacramento Basin. The cover image on our presentation today is meant to make us Aussies feel at home. It's a picture or image of one of our facilities in the Rio Vista gas field, which is the biggest gas field in the Sacramento Basin. And it shows its fit-for-purpose nature in amongst the gum trees, and that's partly why we feel at home, both by the fit-for-purpose approach and being among the gum trees in California. Today, I'd like to have 4 or 5 key takeaways for you that you'll remember and hopefully act on at the end of the process, and keep an eye on us as we deliver these to you. The key takeaways are that the company name is Sacramento Basin Natural Gas Company, so Sacgasco. And I want to emphasize that Sacgasco is in the Sacramento Basin, which is a prolific playground for finding oil and gas. It's already found lots of oil and gas, and we think there's lots of opportunity there. We're in California, where it's an insatiable natural gas market at a premium price. And we have invaluable, irreplaceable infrastructure that we can use to move resources to revenue. And finally, everyone's always interested in activity, and activity is what we're gearing up for here in the near term, and we want to turn our resources into revenue using that activity. The other thing is that the Perth Basin is on a lot of radars at the moment because of the activities in natural gas there. In my view, the Sacramento Basin is Perth Basin's big brother. So let's kick off here now. Sacgasco, was floated in 2005 with about 40 million shares on issue. Today, after 15 years and no reconstructions, we still only have 270 million shares on issue. Not many companies can say that. So we're as we says on the right, we're about running the company on a smell of an oily rag, delivering value for shareholders, and that's delivering value for ourselves as directors as well. As you can see there, we have 9.4% approximately of the shares held by the shareholders. We're a small board, we're fit for purpose, and we like to see most of the money go in the ground. Importantly also, we have no bank debt. This, along with good partners, allows us to act independently and be able to more quickly respond as the world of oil and gas recovers from the COVID-19 slowdown. The Sacramento Basin, what's it all about? Sacgasco has a prominent position. We're in the top 5 in the Sacramento Basin. It's a world-class basin. It's produced over 12 TCF of gas. The largest field is 3.5 TCF Rio Vista field. There's irreplaceable infrastructure throughout the basin. 2 huge interstate pipelines to deliver gas pretty much wherever you'd want to deliver gas to. and these pipelines are not fully utilized at the moment. We're in a number 5 economy in the world as well, and so it's a great place to be operating. We have a portfolio of prospects and wells to use for our growth strategy. We've got all of this infrastructure out there. It would take more than $10 million to duplicate that infrastructure today if we could do it. Obviously, development makes infrastructure implementation harder over time. We have high working interests with supportive partners, and our county governments publicly support us. A good example was the Glen County commentary that we released at the time of permitting the Borba well. The basin is relatively simple in many ways, but complex in others, which provides opportunities. It's a asymmetric basin with a lot of the sediments that we're interested in, reservoirs that we're interested in, the upper and lower Cretaceous, outcropping to the west in the coastal range. So you can actually go out and walk across those outcrop, and then they've been studied by lots of people over the years. It's the key takeaway, but is that there are very few wells that penetrated into the older Cretaceous rocks. And these are not overly deep, and I'll come back to that in a moment. The penetration line on this slide is the dotted red line that runs through there, and there's 6,000 wells in this basin, and most of them have drilled only to that depth on that dotted line. So there's a huge expanse, 40,000 feet that you can see in outcrop of rocks that are still to be explored, and only a handful of wells have actually explored those on valid structures, and but a couple of those on valid structures have flowed gas to the surface, so we know it's good quality gas. So there's lots of opportunity here, not dissimilar to the opportunities that are in the older parts of the Perth Basin as well. Now, the gas market. California has is the 5th highest GDP in the world. Its gas prices are 50% higher than the Henry Hub benchmark gas price. And that's because 90% of California's gas needs are imported, and at the end of a long gas pipeline system in the US. The market's huge. It's 70% bigger than Australia's total gas consumption. It's 7 times, on average, 7 times what the West Australian domestic gas market is. So it's an insatiable market, and I think there's lots of opportunity there. Natural gas is an important component of California's energy system, and we believe that coupled with renewables, natural gas is the way of the energy future. Sacgasco has a clearly defined growth strategy that I've already touched on. We're going to initially increase our gas flows and our revenues using smart capital. Smart capital is using small amounts of capital with short-term paybacks. Some of these paybacks can be as low as a month or so. We want to work over initially 3 wells, but we have others that we want to work on as well. And as things calm down and we recover from the COVID malaise, government-induced malaise, we expect we'll be able to commit in a less risky environment to bigger equipment and more people in the field to follow up on Dempsey and to drill Borba. The near-term value catalysts, I've already covered much of this. we have an opportunity to get out in the field and do these workovers. We've got the infrastructure in place, so we want to boost that production and convert the resources to reserves using our invaluable infrastructure. We have an exciting new understanding of the reservoir potential of the basin, and only could develop that based on the results of our Dempsey well, which had thousands of feet of gas-saturated rocks, but the reservoirs weren't as well developed as what we'd hoped they were. But we also came across some new reservoir concepts, and in drilling that well, and we've been able to match that back to the 3D to come up with a better model, which also fits with the outcrop to the west. We'll continue operating, monitor the operating conditions to determine the best time frame for the large prospect drilling, but we always, as a nimble small company with a small board and well connected across the industry, we'll be looking for mismatched asset prices as well, and for acquisition opportunities if they came up. I've alluded to Sacramento Basin being big brother of the Perth Basin. This is a relatively complex slide that you see in front of you, but it's just comparison criteria down the left, Sacramento Basin criteria in the middle, and Perth Basin on the right. And I'm just going to focus on the top 4 or 5 right now. They're there for you to read about, but you'll see why I use the description of Sacramento as big brother to the Perth Basin. 12 TCF produced in the Sacramento Basin to date, 0.6 of a TCF or thereabout in the Perth Basin. The gas market, 7 BCF a day, less than a BCF a day in the Perth Basin. Gas price, about the same when you do your conversions at current prices, and I think gas prices are low in the US, and in an unsatisfied market, in particular in California, we're looking to see them grow. Key point: well depth. We're still talking about 3,000 meter wells or less. And in fact, we expect to be into attractive reservoirs at 2,600 meters, and even 1,500 meters and deeper. So there's thousands of meters of opportunity there, whereas in the Perth Basin we're talking about 5,000 meter wells. Market caps. It's all about leverage as an investor. We've got a market cap of 4 million. The players in the Perth Basin, with no production, and we produce every day, have market caps of many multiples of ours. We only have 270 million shares compared to the shares on issue for the other companies in this comparison. So, similar reservoirs and opportunities, tens of BCFs to TCF potentials. There are landowner incentives in the form of royalties in the US. We own a lot of plant, and competition and extensive local suppliers means, we're in the low cost end of investing capital, whereas things are pretty expensive still here in Australia and Perth Basin to invest. And we have supportive governments out where we operate. So back to wind up, hopefully you've got a flavour of things here. We've come full circle in the presentation. Gas focused company, Sacgasco, in a prolific playground. We're in a premium gas market, very undersupplied. We can use Sacgasco's invaluable infrastructure combined with the infrastructure that is out there already in place, and we are looking to near-term activity. We'll be in the field within a couple of weeks. So what is there not to like about the leverage that these key underpinning parameters provide to Sacgasco? Over to you all. Thank you for your attendance, and back to Alex.
Thanks very much, Gary. Really appreciate you jumping on and taking the time to talk to us. Now, Gary, we've had a couple of questions that have come through, and you won't be surprised that a lot of them are pertaining to Borba. So just to allay those questions, can you just give us an update on what the latest status is at Borba?
Sure, Alex. As previously advised, Borba is permitted for drilling. We've upgraded the access road, and in many respects, practically, we're almost ready to go. The issue holding us back is that when we're drilling Borba or even a Dempsey follow-up well, we need a spread of equipment, and it's an extensive spread of equipment, including 10,000 pound stacks. And we need 10 to 20 people coming and going at the website, and we're exposed to a daily cost of at least 50 grand US. In the COVID-19 environment, we're reluctant and unwilling right now to expose ourselves or the shareholders to the risk of that being shut down until we have appropriate certainty. Yes, restrictions appear to be being lightened in California and the US, but a second wave, given the fundamentals of the US infections, can't be ruled out and can reverse the situation quickly and leave us exposed to a rig and sitting in the field at our cost. Some of you have asked the question, asked me to guarantee that when we can drill. Now, you all know that oil and gas operations don't allow such certainty. And I've been embarrassed enough times in my career to know better than to give locked-in timing. We see that the market, in terms of gas price and equity markets, are improving. And we have a clear pathway with working interest owners to funding the drilling. Like many of you, we're frustrated by the circumstances. But as shareholders with skin in the game, we will make the right decisions that we believe are right for all our shareholders, and let you know when we believe that the right timing is to start turning to the right on the well. Now, in the meantime, we're not going to sit around waiting. We can use our smart capital approach to the workovers. We can put mast trucks out in the field with just a couple of people on board and using a few thousands of dollars rather than tens of thousands of dollars rather than $50,000 a day spread. So that's where we're at on that.
Thanks, Gary. Now, just on the infrastructure in the Sacramento Basin, and throughout the presentation, you made the comparisons between Sacramento and Perth Basin, and I think everyone on the line is pretty interested in those comparisons. In terms of infrastructure, how does the infrastructure in the Sacramento Basin compare to the Perth Basin? And with some of those larger targets and wells that you referenced in your PowerPoint and the plan to drill, is there a large infrastructure requirement to tie in?
At a high level, the two basins, Alex, have similar infrastructure. The two major pipelines down the guts of the basins, but the Sacramento pipelines can handle over 11 BCF of gas a day at their peak capacity, while the Perth Basin pipelines transport a little over a BCF a day, and much of that coming down, of course, from the Northwest Shelf through the Dampier to Bunbury pipeline. But if we dig deeper into the infrastructure, and the Sacramento Basin has a spaghetti-like spread of gathering lines because over 12 TCF has been produced, while the Perth Basin has just a few laterals used to deliver the half TCF or so of gas production to date. In the Sacramento Basin, for our prospects, there's minimal infrastructure needed to tie in. In most cases, we have our own meter stations that are transmitting gas every day. and we own the local pipelines. And the gas is excellent quality and needs minimal processing to get it to market or into the distribution system. We also have arrangements in place to make additional pipelaying simpler and cheaper in the Sacramento Basin. And this means that in all respects, we can be faster to market with our gas. Pretty much it's just a case, if it's a new zone or a new well, is getting a gas quality test and running that by the pipeline owners, and we're off to the races. So in all respects, I see the Sacramento Basin as definitely big brother.
Gary, how does Sacgasco plan to fund their share of drilling for Borba?
As I said earlier on, Alex, we've got a clear pathway to doing that, and I don't want to go into all the gory details. In the past we've shown that we can fund these activities, and we use a combination of approaches, and including getting partners to come along with us. And as I said in answer to the first question, we've got our working interest partners lined up, and we're being held back primarily by a COVID-19 situation.
Gary, can you just remind us how many wells you have an interest in?
We operate 30 wells, and to go on from that, we can work over a sidetrack those wells, and we've high-graded the opportunities using the smart capital approach, and we're weighing up investment versus time to pay out. And that's why we're proceeding down the seriatim of opportunities with the first 3 workovers that we've talked about in our previous releases and in our quarterly report. I expect that we should be in the field on the first of those next week, and then after that we'll look at those results and adjust our seriatim and move on to other opportunities.
Gary, in terms of Rio Vista, what opportunities are there for Sacgasco in that area? You've got a pick of the wells on the front. Do you have any scope to ramp up production from your Rio Vista wells?
Yep. The 2 wells that are on production at Rio Vista are ripe for some change in the jewellery that's in the hole, to improve the reliability of the production down there. We've got good production, and we've got that at 100%. But there's a better way of producing that gas in a more reliable way. So that'll probably be the next cab off the rank in terms of workovers. After that, a sidetrack out of the existing shut-in wellbore is on the cards. That's it's a bit more capital, but less than $1 million to sidetrack and tap into what we believe is a 3 to 4 BCF opportunity. At current gas prices, a BCF of gas can be valued at more than $1 million per BCF. So we sidetrack for less than $1 million. The return isn't too bad. Of course, if gas prices rise, we get most of every dollar of the rise, any rise and that goes straight to the bottom line, particularly at 100% working interest.
Now we've got a technical question here, Gary, and I think it comes from someone who's a bit of an, I think they're a self-described novice in this area, but could you deep end any of your existing wells, and could that be a cost-effective way of tapping some of those deeper zones?
We look at that all the time, because quite often the shallow part of the drilling is through all the alluvium out there in the Sacramento Valley is the hard part of the drilling. There are a couple of opportunities that would lend them to going deeper, but in general, we need to upscale the size of the casing in order to handle the pressures we get into, particularly with our Dempsey follow-up and Borba type wells. So there's not a lot to be saved in that. Really, those well bores, their value lies in workovers, recompletions, and in the associated meter stations and pipelines in delivering gas from deeper prospects or older prospects.
You just briefly mentioned Dempsey there. Do you plan to work over Dempsey this year?
Dempsey is in one of our top 3 workovers. It's a little more complex, and so it'll be probably number 3. But yes, definitely plan to do that. The other thing worth saying about Dempsey, that there's some, there's a bit of negativity out there, and people dubious about it, what Dempsey provided us. But first of all, I say if you've got a negative outlook in our industry, you may not expose yourself to the rewards on offer for those who learn from their results and apply those learnings. And Dempsey was our first well on structure in the northeast part of the Sacramento Basin, not only ours, but in the basin as a whole. Technically, it was a roaring success. We never imagined that we'd find 4,000 to 5,000 feet of gas-saturated rocks at Dempsey. Every time we gave those rocks a chance to talk to us there, they said they flowed some gas out of them. Yes, the reservoirs are poorer than we interpreted leading in, but as a result of the calibration and the new modelling, as I said in the presentation, we've got a much more robust depositional model that ties back to the outcrops, and we think testing that is going to be a very exciting prospect. A quandary we face as explorers is that choosing a well site on a big structure, high potential, large size, is whether to drill on the crest, because sometimes the crest of structures can be bald, and that we see that around the world, or we drill down dip. As the first well, we had to drill it on crest. In hindsight, we should have drilled it off the crest, and the huge target is still there. It's potentially bigger than before we drilled Dempsey, and the current quandary is which is lower risk, Dempsey follow up or Borba. And at the moment, technically, Borba has its nose in front, Alex.
So, Gary, in the presentation, you made a comment about an exciting. You came up with an exciting view of the reservoir model of the basin. Could you just expand on that for us?
Well, if you go back to some of our earlier presentations, you'll see that we believe we've uncovered a channel system not unlike the channel systems that deliver hundreds of thousands and millions of barrels offshore the west coast of Africa. They look very similar in morphology, and characteristics, and tying those into outcrop and the overall depositional model in the basin makes them look pretty attractive, and so they're something that we want to go after, and it fits well. I think it's different. Our play is different to what has been published in the past. It's a refinement of the past published models and what people have operated on in the past. And remember, very few wells have been drilled out here. There's only a handful of wells drilled beneath those, deeper than those 6,000 wells that have been drilled in the basin overall.
Gary, you mentioned in your response to the question about Dempsey that there were people who were negative or dubious, given that Dempsey was touted as a huge target with lots of potential. The share price ran accordingly, but as you mentioned, the result was not as you expected. Based on that experience, why are you so confident that there's more of these TCF type targets?
It comes down to the mapping. We've got in the northern part of the basin access to more 3D seismic than probably anyone, and we've spent a lot of time mapping that and tying the Dempsey well in particular back into that 3D seismic. We've developed that model. We've tied it back to the outcrop. We're not the only ones that think like this. You have the guys who were behind the Tuliano farm out and and drilling, they still believe they've got a tiger by the tail out there, and still believe there's a lot of TCF plus potential in the basin, and particularly in the northern part of the basin at very drillable depths. So we're just generally confident based on the work that we've done, and it's our job, to reduce the risks and put the money into the smartest places that we believe we can get a return for shareholders.
Gary, just shifting tack for a second, what's the plan beyond the 3 workovers in terms of the similar types of well work?
I don't want to really go into the detail. It's probably fairly meaningless, but obviously, we'll look at the results of the wells. We'll look at the Rio Vista wells that I mentioned earlier on. We'll look at zones that haven't been perforated in wells that are currently flowing, and determine if we believe we're better off going for a higher flow rate out of a shallower zone than sitting here and just sucking on the current zones at relatively low rates. So it's all about increasing, finding the spots to increase the flow rate and the cash flow.
Gary, we've also had a couple of questions come through just on Alvarez. Could you just give us a bit of an update on the status there?
Alvarez still sits there. It's based on the lack of flow out of Tuliano. We're looking at Alvarez and the upgraded model that we have of the reservoirs for the Dempsey and Borba areas. We're looking at those as a more attractive thing to do at this present point in time. But Alvarez still sits there. We control the wellbore, and it still sits there as an opportunity. I'd like to see the gas price a little higher in case the reservoir doesn't flow at some of the rates that we have projected based on pure technical analysis, and just being a little bit more circumspect following Tuliano's lack of flow.
So I think one of the major things from my perspective that came out of the presentation, the strategy is now not to bet the whole company on one well. So outside of Borba, what do shareholders have to look forward to, given that it has been a while since shareholders have heard from Sacgasco, and the updates haven't exactly been regular. So what's changing now for you guys?
We never really want to bet the company on one well, and having just 270 million shares on issue after 15 years as a public company is testimony to that. We've never done that, taken that approach where we blow up the register just to fund a single well. We want to manage our risks through a balance of growth, production, with infrastructure underpinning the workovers and the low risk appraisal and exploration. In the US, they talk about trying to hit singles and doubles, and then when appropriate, trying to hit it for a triple, or when the bases are loaded, or a home run, even at Borba or Dempsey or Alvarez. And we've spent the time since Dempsey updating our technical approach and upgrading the workover potential, and so that's where we're heading. And as we work over wells, look, guys, I'm not going to say, oh, we're moving a rig today to go do a pissant little workover, okay, that for a few thousand or tens of thousands of dollars. But as the flows come in, and if we'll let you know how we're doing. And you'll see how we're doing too, in terms of how we go in the revenues. That we always show it as other revenues for other reasons on our accounts, but hopefully we'll get to the point sometime where we can afford to be listed as a producer, and you'll see the cash flow come through more clearly. We just developed we're developing leads, other leads and plays out here, and if gas prices were $3.50, $4, there are a whole bunch of smaller 1 to 2 BCF prospects that would make sense for us, to drill, infill those wells. But right now, workovers and smart capital is the game, and we're watching that COVID space to see when it's safe to put our more money at risk.
Gary, for those not so technically astute, can you just talk us through the significance of amplitudes when you look at the 3D for both Borba and Dempsey?
How long have we got, guys? At its most simple, we believe that the amplitudes out here are reflecting both reservoir and gas content. Sometimes we do see amplitudes without gas, and sometimes we see so maybe reflecting a reservoir. Sometimes we do see we see gas without amplitudes. Dempsey, there was gas all the way up and down the wellbore, and even in basement, the basement was fractured and it flowed gas at us and while drilling and on test. It just wasn't a sustainable rate that was commercial at the time, but it just shows you that how saturated it is and the opportunity. So at Borba, we use the amplitudes, the fact that they are so anomalous, and the fact that they're all stacked one on top of each other, and in various people have spent their time counting how many amplitude their anomalies are, and I've heard numbers from 10, 12, 14, 16, and it's incredibly anomalous. And there is a model, that fits with that anomalousness, but amplitude on their own aren't the be-all and end-all. You can do all sorts of technical analysis, amplitudes versus offsets and all that, to try and get a better understanding of that. But you need to qualify that with a wellbore with the right well logs in it, in order to calibrate it. So it's a complex field. We put it all together as geos to come up to the conclusions we come to as to where is the best place to put shareholder capital.
Thanks, Gary. Just a couple more questions before we finish. When it comes to drilling Borba, can you talk us through some of the innovative drilling techniques that you will be likely using?
Innovative. It depends on what you're comparing to. We're not about changing the world on technology. We're about drilling safely. We put sufficient steel in the ground at the surface to give us enough room to put an extra string of casing in if we need it. For example, if the shallow reservoirs at reservoir targets at Dempsey come in and we want to put them behind pipe for safety, in order to drill on, we've always got the capability of running the extra string of casing and drill out with a smaller wellbore. Unlike some other folks in the past drilling out here, we drill with a really one wellbore size bigger than most other folks have, and because it gives us that flexibility to respond to the Mother Earth when she starts talking to us pressure wise and drilling component wise. We're going to drill safely, and that's primarily what we do. We'll apply modern technology, but we're not going to be experimenting.
Gary, in terms of all the reports you've read lately on natural gas pricing, which ones do you pay attention to?
I pay attention to a lot of the intelligence that gets summed up in reports, but I mainly rely on my almost 50 years in the business, as a consequence of the fundamentals that I see, which primarily is increasing demand. Outside of this little hiccup we have at the moment, I don't see that changing at all. And I'm a natural gas bull and have been for some time. Almost all of the reports I've read lately have been bullish on natural gas. That's a bit different to the oil scenario. Raymond James and Associates this week were reportedly forecasting $3.50 for Henry Hub gas in 2021. That's just one of those. I've seen projections for gas prices over the next couple of years as high as $5 an MCF, and at $5 we can make hay at those levels. And it's always worth remembering too that our natural gas prices in California are at a premium to Henry Hub. Historically that's been around 15%, but recently, and so recently for the last 6 months or more, the premium has been much higher, and there are times when it's been much higher. But generally those are related to local events, or the fact that everyone in the east is freezing and using all the gas before they put it in the pipeline to go west for the Californians. And yesterday, for example, our premium to Henry Hub was almost 70%. So it varies day to day, but we're at a premium. We're a low cost operator, and so we push that any increases in gas prices through to the bottom line, so we can have more activity going into the ground.
Gary, there seems to be a perception that California isn't exactly oil and gas friendly. How do you counter against that perception, and is that perception actually correct?
Yeah, it's interesting, isn't it? On the surface, that perception might be reasonable. And some of the California government's aspirations, while admirable, and not significantly different to the aspirations of a lot of us individually, or a lot of governments in the world. We all want a sustainable world, but this is a big but. Californians are not going to give up their cars. The starlets and stars in Hollywood are not going to stop driving their Hummers around. The Californians are not going to give up their air conditioners. And it's going to be a decade or two at least before hydrocarbons really start diminishing significantly as an energy source or a fuel source. Natural gas in California, they import 90% plus of their needs, and they import it at the rate average of 7 BCF a day, and that's and up to 11 BCF a day. That's a heck of a lot of gas. That's 2.5 TCF a year, and that's needed to keep the lights on. Most of the governments around the world, particularly in advanced economies and even in less advanced economies, have regulatory approaches that are becoming more and more onerous. California actually has quite a practical approach to oil and gas exploration and production. Their use of field administrative units for approving oil and gas wells, and it works well and quite efficiently and quite timely. Remember, California has the county, Kern County, that's the largest producer of oil in the lower 48 states. So there's a lot of oil and gas activity goes on quietly over the hills away from the coast of California, up the Great Valley, along with the production of food for keeping America fed. So don't believe everything you see there. We can operate, and we don't mind operating. And if you want another insight into that, the biggest company in California, go have a look at their website and their comments on operating in California. So that's my comment. Don't believe everything you read.
Thanks, Gary. And just a final question. You've been very generous with your time. So just bringing it back to Sacgasco in particular, can you see any capital raises in the near future?
we're a small company. You know, we're always looking for capital. We're always looking for support. Obviously, we do it very sensibly. Otherwise, we'd have a lot more than 270 million shares on issue. We've got options out there. It'd be lovely to get those into the money for shareholders and get those converted. We've just recently done a small convertible note to fund these smart capital workovers that are going on in the next week or so, and get ready, to make sure we're ready to drill and get after the deeper, the bigger opportunities post COVID-19. So everyone knows that if you invest in a company like Sacgasco, there will be capital raises and there will be farm outs. There will be, we will use every mechanism we can to provide the best value for money for our shareholders.
Thanks, Gary. Look, firstly, everyone, thanks very much for your time. It's been great having you on, Gary, to go through the presentation, and you've been very generous with your time. You've been dealing with a lot of questions as well, which is fantastic. So, Gary, thanks very much for joining us today.
Well, okay, Alex, could I just have just a minute to sum up, and just reiterate where I see we're at. Okay. Alex?
Gary, go for it.
Okay, sorry. Thought I might have lost you. Yes, thank you everyone for your interest. It's satisfying to know that people are interested in what's going on, and I know we all have a vested interest in what's happening here at Sacgasco. I think we're in an enviable position in the gas market investment scene. Just go back to slide 10 and the sum up of the key issues. I often use a real estate adage. What do real estate people talk about? Location, 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 and usually the quality of the offering is another key part. In our case, I translate that as Sacramento Basin, Sacramento Basin, Sacramento Basin, combined with the infrastructure that we own and that's accessible to us, and the opportunities, those singles, doubles, triples, and home runs. I ask of you, the attendees and shareholders, to help get the message out. Spread the word. Everyone's excited about the Perth Basin opportunities, and they are exciting. But what we have ahead of us and available to us as opportunities are more exciting, again, in my belief. And I've worked the Perth Basin hard. I've sold those pipelines in my past lives, and I've worked those prospects, and so I'm making this comparison from experience. So please go out, spread the word, get behind us, get our share price up, get others interested because of that, and let's get out and let's get turned to the right as soon as COVID-19 lets us, give us a bit more freedom to play. Thanks.
Thanks very much. Thanks, Gary. Now, you've been very generous with your time, so really appreciate you joining me today. As I mentioned before, up the top, recording of the webinar will soon be available on the Sacgasco website. And now, if you haven't done so yet, you can download the presentation that you saw today off the ASX. You'll be able to navigate to there and get it off there. And finally, if you have any follow-up questions, I know we had a stack of questions come through. We weren't able to get through all of them. So if you have any follow-up questions, please feel free to send them through to myself. I'll forward them to Gary, and he might be able to contact you independently. We'll be able to get you a response through to you when we can. Thanks very much, everyone. Have a good afternoon, and thanks very much. Cheers.